Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the midweek update for Wednesday, January 22nd on the markets. Hope everyone has had a nice week so far and hope you had a nice day off on Monday. Anyway, as you can see, my newsletter is divided into 6 major sections, same general theme as I always keep, where we first discuss my opening thoughts and summary on the market. We're going to move on to some admin things, our mechanical trading systems. We still have that open SPY mean reversion system trade, which is kicking butt. Then we'll move down to the general market analysis, do a top-down approach on the indexes. We'll look at a few of these large cap stocks that are reporting earnings. Netflix reported yesterday, last night actually, and of course had a big blowout. We'll look at a few indicators. We'll review some market sectors, look at the dollar, Bitcoin, commodities, precious metals, and mining stocks. I had quite a few nice long ideas on the weekend, which has done very well, and we'll cover those in the trade ideas. Again, as far as the market, as you know, it's been a strong follow through so far this week with a gap and go on Tuesday following Monday's holiday. And we had a gap up with, we had a big gap up yesterday and today. So we now have 3 open gaps on this move up off the January 13th low. The S&P 500 made a brief new all-time high intraday before pulling back a bit. The NASDAQ and triple Qs have not yet made highs, but I think that's only temporary, while the Russell 2000 and Dow Jones continue to lag. As far as this move on the market, it is clearly impulsive. It's, short term, it is quite overbought, in need of a pullback. That said, when I look at the wave structure, this appears to be some sort of wave 3. So once we get a pullback, looking for that to be a wave 4. Remember, we're in earnings season. Markets typically hold up in earnings season. And that's been the case this year. So this image below here, before we get into the weeds of things, here's 2 images on the left. This is the daily S&P 500 chart. Again, you can see how, we filled that open gap just over a week ago, got in a little of that demand zone where we found support. We rallied up, we took out the downtrend line, and today we made an intraday new all-time high in the S&P. On the chart on the right, this is a 60-minute chart I've been showing. You can see those 3 open gaps. But if you look at the wave structure here, clearly this is impulsive. You can see wave 1, 2, and 3. So this is a wave 3 of some sort. So when we do get a pullback here, guys, I'm looking for it to be only some sort of wave 4, which will ultimately be bought, and then we go up yet again. Again, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago, back in 2003, to provide the best technical analysis on the planet. Awesome market newsletter analysis, amazing trade ideas, and mechanical trading systems, which is my personal passion. Have dozens and dozens of mechanical systems. You should check us out. Click the enroll button, sign up to our subscription. I think you'll be impressed. Okay, let's move on. So before we go back to the general market, let's talk about these systems. So this image here, item number 3, this is a daily chart of SPY, and this shows you our open QE-BTS mean reversion system. So this system took a long trade in mid-December. It bought that first big pullback. It sold on the bounce, and which was a good place to sell because the market then sold off again, made another lower high, and made a new low. So the system made nice money there. We sent that out to our subscribers. And then the system went long again here in January, almost at the lows, basically one day before the low. That was a Friday, and then you had the gap down on Monday and then recovery. System went long there, and it is still nicely long. Just these 2 trades from this system would have easily paid for your subscription to Breakpoint Trades for quite a long time. And this is just one system out of 21 systems for the mean reversion. But, this graphic here, and I'll go over this more detail in another video. I had a recent video on this system, as you know, a week ago. But this system is multi-tiered. It's kind of like, my analogy is the system has multiple rules here. It first looks for a mean reversion move above a short-term moving average or a fast moving average, such as the 8-day moving average. All right. So when it achieves the mean reversion move, it then decides if it's going to hold the trade or not? Well, one of the things it looks at is this momentum indicator. If it's red, like it was here, it's a little bit covered up by this graphic, but it was red, and that's why it exited. So this last time when it went long, after it got its mean reversion move about the 8-day moving average, the momentum indicator was green, and that's why it's still holding the trade. And that said, there's actually a third component, trending component, that can come into place. It's this 34 link stochastics you can see at the very bottom here. And remember, 34 is a fib number. So if the trade gets held long enough by the momentum indicator where the 34 stochastic works its way from oversold to over 80%, it'll then hand the baton off to that and continue holding the trade long until it falls below 80%. So this is kind of my graphic right here. Number one, you get your mean reversion system move. If the momentum's green, it hands it off the baton in a relay race to the next hold condition, which is the Momo condition. If that is held long enough that the 34 stochastic hold condition triggers, it then hands it off to there. So it's pretty cool how these systems work like this, step by step by step. But great trade, easily pay for your subscription. And if you're just a YouTube subscriber, man, this is a reason to subscribe. Next. Here's another image, and I posted this today in a trading community blog, and I'm going to do a separate video about it. But one thing I think is the holy grail is combining mean reversion and trend following. So they're both kind of mere opposites of one another, and it allows you to catch both sides of the market. So many of you know of our KISS systems that basically are trend following. They're long only. They keep you in uptrends with these smart trailing stops. Okay. Right. Well, the mean reversion, a lot of the mean reversion trades trigger whenever the KISS systems are flat. So you can see here on the SPY, it was long back here. Then it got out in April. It was flat. Well, one of our mean reversion systems triggered a first and second entry there for a nice trade while the KISS system was flat. Then the KISS system kicked back in, got out there in late July. Then we had that correction in August of last year. The mean reversion systems did two trades there. One in mid-July, bought the first sell-off, sold the bounce, lower high, got out, and then bought the low again, caught that trade, well, and then the KISS system kicked in. And KISS system got out in December, and then that QEBTS mean reversion system so far has caught these two nice trades. So it's a great example of combining both of these. And actually, one of the folks who works for us, some of you have interacted with him, Rick Kwan. He actually used to work for John Bollinger Band, the inventor of the Bollinger Bands. And John Bollinger told Rick that, in his opinion, the holy grail is combining trend following with mean reversion, and that's kind of what this is. And so we have the tools here, guys. So great example of that. Anyway, let's move on. So let's go back to the general market newsletter. So item number 5 shows the index sector trade, but what transpired today and this week. Again, today market was up yet again, except for the Russell. See, the Russell's lagging here, down 0.65%, but otherwise all the other indexes were up. The NASDAQ area led in particular, not surprising with some of those earnings. Nice up week so far. Major indexes are up anywhere from 1.25% to almost 2%. That said, it wasn't a big broad-based rally today. In fact, look at how many down sectors there were today, dwarfing the up sectors. And so clearly the rally today was definitely concentrated in the big cap stocks, especially the tech area. But you can see out of the 21 sectors, majority were down quite a bit. Now for the week, everything's up, or most of the sectors are up anyway, save for energy. Energy is finally pulling back. Remember, it's had a big rally into that supply zone I discussed in my last newsletter video. That's pulling back. Currencies, US dollar up today, but down 1% this week. Cryptocurrencies, Bitcoin's been pulling back a little bit. Hasn't been as strong as the market here in the short term. Commodities, slight down today, slightly down for the week. Again, they were quite overbought, so pulling back a bit. Crude oil, remember, was in that supply zone, so it's pulled back as well, down 2.5% for the week. Natural gas up 4.5% for the week, so that continues to be strong. Copper down a little bit today, 0.8%. Uranium's up 4% today, up 8% for the week. Little mixed bag here in the agriculture area, and precious metals, have been quite strong. Gold up 0.5% today, up 2% for the week. Silver fairly flat today, up 1.6% for the week. GDX, the miners, they were down today. Otherwise, they're up for the week. And as far as the bond market, slight bounce today in the 10-year, 30-year, but otherwise they are down this for the week. And remember, that pullback in rates, which started over a week ago, that's helped the market. Next, item number 6 shows the economic news calendar. As I said, there's not a lot of news here on the docket. Now, for Thursday, we have initial jobless claims, natural gas inventories, and then on Friday, we have U.S. PMI and global PMI. So we'll see how that comes in. But by far, the biggest culprit for the market is earnings season. Earnings season started off in a bang with the banks, which mostly did well. And, a lot of these earnings, like Netflix the other day, and some of the larger cap tech stocks are coming up. So earnings are front and center. Generally, the market holds up well during earnings season, and so far that has been the case. Let's go ahead and move on to the chart. So chart number 7, we'll start with some of these big cap stocks. So here's Netflix. So this reported yesterday. It was into that demand zone. Well, blew out their earnings. They raised their subscription price as well. So had a huge gap up basically to 1,000 before pulling back on the day. Black candle, but those who held into earnings were rewarded. Next, number 8, here's Meta. Now, Meta doesn't report until the 29th, so not until next week. But otherwise, it's a bullish looking chart, kind of a coil here. So when to watch. Chart number 9, here's Microsoft. Nice day today. Found support at that demand zone down there. Earnings are the 29th next week as well, so you definitely have time to buy it. Otherwise, you could see this big coil developing. Chart number 10, here's Tesla. Now, Tesla has earnings on the 29th as well. For the moment here, the Tesla chart needs some work. You could see made new all-time highs back here in December before pulling back. But this last bounce, stalling at the supply zone before pulling back, you got a larger demand zone below. Again, earnings can trump the chart, just like we saw in Netflix with that big old gap up. But again, earnings aren't until next week, so this could chop around, it could pull back, whatever. Definitely looks a little vulnerable here with that rejection off the supply zone. Next, chart number 11, here's Apple. Now, Apple's been taken to the woodshed. This has been selling off fairly relentlessly since late December. However, bouncing today, nearing that 200-day moving average, always not a bad area to take a shot. By the way, our volatility system took a long trade today on that. So actually, let me pull that up. Here's the Apple volatility system. You can see the long entry today. So it's kind of like a mean reversion. So we'll see. But anyway, earnings are on January 30th, and it is quite oversold. Next, chart number 12, here's a 2-hour view. So you can see this relentless sell-off. You can count 5 waves down at this point, and you can see it's trying to bounce a little bit into this demand zone. Next, chart number 13, here's Google. This reports on February 4th, so about 2 weeks from now. Still holding up very well. Some others, here's Amazon. Now, Amazon doesn't have earnings on the horizon, but chart's quite strong. You essentially had a ABCDE falling wedge into the 50-day moving average. It was a bullish looking chart, and it's broken out nicely this week. Chart number 15, here's NVIDIA. So NVIDIA held that big support zone for now, rallying up. Earnings are also not on the time frame of this as well. NVIDIA kind of reports on its own schedule. Same with Broadcom. Here's Broadcom. I showed this on the weekend, this coil. So it's popped out of the coil, but earnings are not on the horizon. Obviously a very strong chart. So we'll see how these big cap tech stocks do on earnings from a week to a week and a half from now. Let's move to the index chart. So chart number 17, here's the weekly view of the indexes. Chart from the weekend. So on the S&P and NASDAQ particularly, I said they had a bull flag look. You can see they're trying to break out of these flags. Next, number 18, here's the Dow Jones. So as you know, the Dow here, it had that precipitous 10, 11-day sell-off there in December, then bounced. I warned about that broken channel line being resistance, which it was. Sold off again, held that demand zone once again. Now it's retesting the extended channel line, so could be another area to pause a little bit. Moving on to the S&P 500 chart, chart number 19, here's the weekly S&P. So far breaking this little flag. Remember, it held that demand zone. It's been in a uptrend channel here, for the last year and a half. And so far it's up 1.5% this week. Next, chart number 20. Here's the daily S&P 500 chart. And with the KISS chart. So now it's testing the ATR. That said, this version still hasn't went back long. That said, and I had some questions about this from folks today, the non-high performance went back long, a couple days ago, and the smaller time frames, 78-minute, etc., SSO, UPRO, they all went long days and days ago. So you should check those out on the KISS High Performance. Next, chart number 21, here's the 4 time frames with those indicators we like to follow. Like I said, the daily on the upper left, right around the daily ATR here. Again, just short term, we're a little overbought here. Here's the half day. We have a DeMark 9 here. ATR is supporting all these lower time frames. You can see the DeMark 13 on the 78-minute, DeMark 9 on the 130. So again, a little overbought here. We could use a pullback here at any time. Next, chart number 22, here's the RSP. That's the S&P equal weighted. So this had a nice divergent low, nice rally, but you can see it's pulling back right around the 61.8 fib, logically. Next, chart number 23, here's the S&P 500 daily chart. Again, as you can see, it after filling that gap just over a week and a half ago, a couple weeks ago, got into that demand zone where it held. Rallied up, took out the downtrend line, and today briefly made a new all-time high at 61.01. So before pulling back, okay, it's been a nice impulsive move, testing those highs. That said, could be a logical area for at least a pullback, but I think a pullback will be a little fourth wave, a temporary pullback. Chart number 24, here's another daily chart. This expanded coil I've been showing. Remember, we had that little Pinocchio move below that before recovering. We've basically, S&P wanted to fill that gap, which it did. So one target could be, over time, this upper coil trend line. Next, chart number 25, here's another chart. This is the time cycles chart. I haven't shown this chart for a while, but I'm using 2 cycles here, a longer cycle and a shorter cycle. And these have been lining up fairly well with price, as you can see. That said, the next cycles, it appear to be around, sometimes look like around in mid-February. So maybe that's an area for some sort of high. We'll see. Again, it's just a guide, just showing you this for informational purposes. Next, chart number 26, here's the half-day chart. Again, this was that bullish option we've been showing where that last pullback was a wave 4, as long as it held that last big higher low at 56.96, which it did. So we're now in the midst of this wave 5 rally. And chart number 27, here's a 60-minute view. So again, this was the chart I showed in the weekend. Remember, we had the bullish break in symmetry here, and price just kept going. So just to show you the impulsiveness of this move, you can see wave 1, 2, 3. So this is clearly some sort of wave 3, which is quite impulsive. That said, when we do get a pullback, which could occur any time, I view that as a wave 4 of some degree. You can see we have 3 open gaps now to the upside. All right, so guys, again, I am looking for a pullback here sometime soon, but I'm looking for it to be some sort of ABC fourth wave, perhaps maybe filling that gap, something like that. I love the pullback. I would like to at least see it hold that gap or maybe retest the broken trend line here and not go too deep. Okay. Next, chart 28, here's the NASDAQ weekly chart. You can see up 1.9% for the week. Next. Chart 29, here's the Triple Q's KISS system. Again, no changes here either. Testing the ATR. Like I said, the standard Triple Q's KISS is back long. It has been. And the smaller time frames like the 78-minute or some of the leveraged high performance KISS systems have been long days ago. So next, chart 30, here's the 4 time frames. Again, very similar look to the S&P. You can see these DeMark 9, 13s. We're quite extended here. ATR is supporting all these lower time frames now. Next, chart 31, here's the daily S&P. Again, this fourth wave option I showed on the weekend is definitely playing out. Now the Qs, unlike the S&P, have not taken out their December highs. That said, I think it's only a matter of time. So, I would view a pullback as a buying opportunity. Next, chart 32, here's the 60-minute view of the Qs. You can see that stair-stepping action down, big rally up, and you can also see these 3 open gaps, just like on the S&P. And finally, chart 33, here's IWM small caps. They've lagged this week. They're actually down this week while the other indexes are up. You can see, again, perfect rally off that 200-day moving average and 61.8 fib. You had 2 important technical events lining up right there. That was a good buy, along with that divergence. So technically, you had 3. You had 200-day moving average, 61.8 fib, and the RSI divergence. So you had 3 technical events. Whenever you have 3 important technical items lining up, that's a very low risk trade. Anyway, overall, pulling back right off that 50-day moving average, not surprising. Overall, this area is lagging quite a bit versus the S&P and NASDAQ. Okay, this does it for the major indexes. As far as futures tonight, guys, futures are down a few points. Next, chart 34, here's the VIX. So the VIX has been moving down with the market moving up, not surprising. That said, the Bollinger Bands are starting to pinch here on the VIX, so we could see some volatility here soon, so be aware of that. And the chart that tells me to be wary of at least a 4th wave pullback is this 60-minute VIX chart. Remember, the VIX likes to fill its gaps. Well, it filled this gap today. This says unfilled. I need to change that. So this gap was filled today, finally. We got a big open gap down here below, which I think will be filled, with new all-time highs. That said, notice the MACD positive divergence here. So this could be an area for a bounce in the VIX, and also on the flip side, that 4th wave pullback on the S&P. So, short term, looking for a possible pullback with this divergence in the market. Next, chart 36, here's the 10-year Treasury yield. Remember, that had a nice pullback. Bouncing here so far a little bit in demand zone, but overall, nice pullback in rates, which has helped the market. Next, chart 37, here's TLT 20-year bonds. Remember, these move opposite to rates. Nice rally off those dojis. It looked quite oversold. Pulling back here, but I think a pullback is also temporary. Chart 38, here's UBT. That's the leveraged play on TLT. Same analysis applies. And chart 39, here's high yield corporate bonds. Remember, they were leading to the upside. That was another positive for the market. And they briefly made new highs here. They held that uptrend line too on the last pullbacks. All right, reviewing some of the market sectors. Remember, the majority of the sectors were actually down today. So here's XLF Financials. They had a nice rally off that demand zone, but they're now into a supply zone. Remember, they had earnings, so this could be an area to pause. So far, we're seeing that. Chart 41, here's Goldman Sachs. This is one of the long ideas I gave last week for the bank earnings, and this gave a nice breakout trade, as you can see. Still looks quite nice with that volume breakout. Next, chart 42, here's XLK Technology. So this has been lagging, but finally playing catch-up here. Taking out, basically testing these recent highs. The earnings have helped this. This is recovering quite nicely. Chart 43, here's semiconductors. This also started breaking its coil yesterday. Nice follow through today, so that's a positive. Next, chart 44. Now, these other sectors that aren't tech are starting to lag a bit. So here's transports. They've had a nice rally off their 200-day moving average, but notice pulling back off this 61.8 fib, which you'd expect. Chart 45. Here's XLV Healthcare. This has been in a very nice downtrend since December or September, but breaking the channel yesterday, which is a positive. That said, we don't have a bullish symmetry break yet. So far, the rally off the lows here, about $7.20. The largest rally was here in November, which was $7.50. So we need a rally larger than that 750 to have a bullish symmetry break. Next, chart 46, here's XBI Biotech. Remember this wedge pattern we've been showing? So it's rallied up into the wedge, now testing the downtrend line of the wedge before pulling back some, so confirming that wedge. Keep an eye on this because this is a bullish wedge setup. Chart 47, utilities, big sell-off right from that supply zone that I showed on Monday. Again, guys, a lot of these sectors this week have pulled back except for tech. Now here's XLE Energy. Remember, on Monday, I warned about this supply zone. XLE had basically a V rally up to that area. Well, now it's selling off. Again, ultimately, a pullback here will be a buying opportunity, but I'd be careful about buying this too early. It honestly needs a 3-wave zigzag pullback of some sort. So far, we just have one wave down. And chart 49, here's that really clean chart. You could see it stalling at this upper top of the range, finding support at the bottom of the range like it did in December. V rally up, pulling back off the supply zone. Chart 50, here's the weekly chart. Awesome rally off that demand zone from December. Ultimately, this looks like a bullish ascending triangle. But again, short term, it needs to work off that overbought. And chart 51, here's oil services. So down about 2.8% this week in this big channel. Here's the daily chart pulling back right off that supply zone. Okay, now we'll see if this broken channel line can act as a support. Again, all the energy stocks are pulling back here. That said, guys, this will provide another buying opportunity. Here's Oxy. That's Warren Buffett's favorite stock. Remember this bullish wedge I was showing back in December, which gave a great trade. Pulling back now, but we did have a symmetry break there. So I am also looking for this to form a higher low on a pullback. So I'm waiting for this to buy this again, but I think it needs some time. Chart 54, here's emerging markets. Nice rally so far. It's now approaching the downtrend line. That could be an area to pull back. The pullback in the dollars helped that, so let's look at the dollar. Chart 55, here's the US dollar weekly chart. As you can see, pulling off that supply zone I talked about on the weekend. All right. Chart 56, here's the daily chart. Again, it's pulled back here nicely. It's bouncing here a little bit this evening, but this recent high had a pretty good MACD divergence. Chart 57, here's Bitcoin. Bitcoin did make a new all-time high at 109,000. It's pulling back here a little bit. Again, the broken downtrend line is now a support. Should be. Chart 58, here's moving on to commodities. Here's DBC, also pulling off that supply zone. Again, it was quite overbought, quite extended. The 9 EMA is your first support here. Chart 59, here's DBC on the monthly. Like I said, it's been consolidating here for the last 2.5 years. You can see how the moving average ribbon's really pinching. I think commodities could have a pretty good year, but short term needs to consolidate. And here's the breakdown of the commodities by percentages. There's actually quite a bit of short term or treasury bills in here as well, but it also is dominated by energy from crude oil, Brent crude oil, natural gas futures, gasoline futures, heating oil, etc. Chart 60, here's the DBC SPY ratio, this bullish falling wedge I was showing in December, which played out. Been pulling back. That said, I am looking for this wedge perhaps to form a higher low like I depict, as long as it holds above the broken downtrend line of the wedge. Next, chart 61, here's the daily chart of crude oil. Notice, guys, pulling right off that supply zone I talked about. That said, there's a demand zone down here, which could offer some support. Chart 62, here's natural gas bouncing back again. Remember, we had a big major macro trend change, 200-day moving average, basically capped the price for the last year and a half. Once that was broken here in December, this set a new uptrend. That's why I have this colored in green. Chart 63, copper, pulling back a little bit. Again, broken down trend line. These moving averages down here are support. Chart 64, uranium, nice rally so far. You can see the volume. Long term, I like uranium, of course. And here is the weekly chart. This uptrend began in 2020, and we had essentially an ABC correction from last fall into end of the year. Next, chart 66, DBA, breaking out of this coil here to the upside. And chart 67, corn. Corn's had a nice move out of this break. It's now into a supply zone where you can see it's been struggling a bit. Moving to precious metals, chart 68, gold, up 1.4% this week. All right. Again, eventually I'm expecting $3,000 or higher. Chart 69, here's the daily chart showing this coil pattern. And chart 70, here's the daily ETF GLD. You can see how it broke that coil and has held that so far. Next, chart 71, silver. So silver lagging here a bit behind gold. This last rally bounced off the supply zone, or demand zone, but it needs to take out the downtrend line here. So far, it hasn't done that. That said, doesn't really matter to me. Here's the bigger picture view of silver. Ultimately, broke out of that big 4-year coil last year in March, pulled back off the first supply zone, but ultimately I expect this to work up much higher over time. I think sometime this year, it'll get up into those upper 40s or higher. Chart 73, here's GDX, gold miner stocks. So far they've had a nice healthy ABC 3-wave pullback off that October highs. A little pullback today. On the weekend, I gave some trade ideas in the precious metals. AEM was one of them. So it had a beautiful coil pattern on the weekend. So far that's broken out this week, up almost 5% for the week. Excellent trade. Here's the daily chart. You can see the coil break. Nice trade. The other one I showed on the weekend was KGC. So this did pop a little bit today, but this week, but you can see its resistance is up here around 1080. All right, guys, let's move to the final part, some other trade ideas. So AIQ, here's the artificial intelligence ETF. As you know, yesterday there was a conference with Trump and these AI companies. They had a little pop today and pull back after that, but this is an ETF, AIQ. Next, chart 78, ARM, one of our recent long ideas. Boy, ARM had a hell of a pop today, up 16%. It actually broke out yesterday from the coil. Hope you bought that. Huge follow through today. Looks great. Chart 79, SMMT. Here's one long idea of ours last week, was in a beautiful tight channel. Broke out big time yesterday and is up today into the supply zone. Awesome percentage move the last couple days. Next, chart 80, here's Interactive Brokers. Was a long idea last week. Now, this gapped on earnings, but it was a beautiful chart. If you were willing to hold into earnings, you had a great day. Chart 81, SRRK. Long idea from Steve last night. Triggering today slightly. Looks pretty decent. Chart 82, LEU. Here's a uranium stock. Popping up a bit. Chart 83, MXL, long idea from a couple weeks ago. This pattern played out very well. It's pulling back a little bit today, but you should have taken some profits by now. Chart 84, TVGN, this little bottoming play, little biotech, trying to bounce off this little support as I suggested. Chart 85, here's the 60-minute view. You had a wedge here, and it's trying to curl up a bit. Some others, here's Intel that I mentioned on Monday. You basically have this quadruple bottom support volume, and it is very, very depressed. So this one does interest me. I own a little bit of this one. I think it has a decent bottom in for now. And here's the big picture of Intel. Again, it goes back to 2008, but you can see this big demand zone that goes all the way back to 2012, 13, 14. So, Intel's had a hell of a haircut since the 2021 highs. So, coming from $62 all the way down to 18. But this is a demand zone, so to me, the way the daily chart looks and this chart into this long-term demand zone going back, 11 years, 11, 12 years ago, to me, looks like a low risk area, at least for a shot. All right, guys, that'll do it. We'll see what happens tomorrow and the rest of the week. Like I said, I'm looking for a little pullback in the market, some sort of fourth wave. So we are quite stretched. And it looks like that way of futures. In fact, futures are weakening here a little bit. ES futures are down about 7 points. All right. Talk to you later. Have a wonderful rest of your evening. Thank you for all your support. And if you're just a YouTube subscriber, please consider subscribing. I think you'll be impressed. Take care.